thanks for joining me on my market report. My name is Mike, and if you're new to my channel or my videos, we kind of do videos on mortgage rates, what kind of impacts them on a daily basis, whether it might be something from the economic data or something from the headline news or geopolitical. Sometimes even there are attitudes or sentiments in the markets that change, and sometimes from the outside it looks like great news, but the market isn't responding to great news what you would think. So we're kind of here to explain as to why this is happening and trying to give you some that information data out there. If you're on the real estate side of things, you probably would like to get a little bit more information and hopefully some explanations to give you better knowledge of what's out going on out there. To those who are looking to buy or refinance, it might be checking out where rates are going. And hopefully these videos can help you to decide whether to lock or to go ahead and wait a little bit on your rates. So without further ado, we'll jump right into it. We'll start off with the economic calendar. Every Thursday we get the initial jobless claims, and we got today. Uh, last week's they had a revision from 222,000 people applying for unemployment that week to 227,000, so revised slightly higher. Forecast for this week was 215,000, and it came in at 184,000. Now there is some concerns with these numbers being a little distorted in some ways, primarily because when you look at the holidays, we get a lot of people getting hired for temporary jobs, and then after the Christmas or after the new year, of course, a lot of those people end up going into the unemployment rate. Now, so this could be a little distorted, but this is a very low number, which is obviously good news on the headline number. However, we just got to be a little cautious of what that number really represents here. If you look at the continuing claims, it went upwards a little bit. So we went from 1.956 million, revised slightly lower down to 1.954. Forecast was supposed to be a dip down to 1.9 million, and it went upwards 1.992 million. So more people stayed on the unemployment uh, stayed on unemployment there. Last but not least, it's kind of a mild one, but we do got the wholesale inventories for the month of October. So September went up 2.2%. Forecast was supposed to continue that trend. It went up slightly, a little bit more at 2.3%. And then later today, we'll have the 30-year bond auction. This could have an impact on the mortgage rates here as well, depending on how it came out. The 10-year came in pretty decent, so we had a good response and got a nice little bump up in the market, which means rates came down slightly. So we had a little bit of improvement, which was good news for that day. So I believe that was on Monday we saw that happening. Gave us a little bit of improvement. Uh, Currently, right now, bonds are up 9 basis points. So we're kind of on the verge of maybe seeing some improvement. As you can see here, for the most part, we're kind of in this sideways range. Heading into tomorrow with the CPI report, and then next week they're kind of looking ahead towards the FOMC meeting will begin. So it will begin next Tuesday, and then give their announcement next Wednesday. They're already kind of building in to the FOMC policy change that they kind of already kind of they already kind of mentioned it. Uh, Jerome Powell, kind of during his testimony with Congress, along with Janet Yellen, they kind of indicated that there will be a policy change coming ahead. So investors are already kind of pricing that in. On the headline news, we got a couple different things going on. They kind of talked about, now Pfizer and those guys are talking about maybe a fourth booster coming in there and getting the, improving your luck against the different variants out there. We got Evergrande in China getting downgraded on their credit because now they officially defaulted on some of their loans to their creditors. So those are what's going on right now. Uh, but as for mortgage-backed securities, again, we're up about 9 basis points. So for the most part, we are in the same pricing as we've been seeing the last 3 days. However, we could see some improvement. Also, a lot of that will be depending here in the next couple hours how the 30-year auction will do. And if that 30-year auction goes well, we could see an improvement there as well. Hopefully, we can get bumped up all the way up towards this 25-day moving average. It seems to be pretty much a lid on us, keeps it kind of lid. So if you see here, we've kind of touched on it and kind of went the opposite direction. It's, for the most part, kept us from really going too much higher. We got up to the we haven't been able to get up to the 200-day moving, 100-day moving average. And 50-day we have touched, but very, very short-lived. Basically, for a day like here, we're up, and then we bounce down. Here we touch once, quickly down back to the 25-day moving average, and then back downwards. So this 25-day moving average, for the most part, has been pretty tough. Here's the daily. See, here's the volatility today. We went upwards, came back down, then worked our way back up, back down. Now we're working our way back upwards again. So a little bit of volatility in the market today. Stocks are down, so we got the flow of money coming in from stocks into the mortgage-backed securities, which is kind of helping us a little bit. And so as for treasuries, treasuries also come down a little bit as well. We're kind of more sideways from where we left off. Yeah. Oh no, actually we're down from yesterday. So we're back to where we about started yesterday, about 1.485, so just under 1.49 after touching up to about 1.555-ish yesterday. So yeah, actually touched off at 1.537, so just under 1.54 yesterday. And now we're back down to about just under 1.49. Then lastly, we'll go over the average rates for the U.S. underneath conforming loan limits. They do have points built in to get into pricing. There's no one size fits all. A lot of variables go into pricing a rate, and also, of course, we got different loan programs with their own pricing in there as well. So FHA could be different from conforming, which could be different from your VA or even jumbo loans. And then also on top of it, we got variables like your equity in a home or a down payment, depending on if you're a refinance or purchasing, your FICO scores to type of property, like a single family versus a condo or townhouse or multi-unit property, to occupancies, if you're a primary residence or investment properties. All these variables together, not just take one or two, all these variables together is what kind of gets into the pricing of a loan there. So a lot of people think that, well, I got good FICO, so therefore I should get the best. Well, you may not have a lot of equity, so therefore you have the rates could be a little bit higher than what you might expect. So just keep that in mind when you get your rate quotes. So without further ado, we'll jump right into it. The 15 years at 2.59 today, and the 3-year is at 3.25%. So hopefully that will give you some ideas what the rates are looking like today. If you guys got questions about anything, please feel free to reach out. We're kind of at a wrap right now. However, if we can help you guys out, please also reach out. Again, a little bit about myself. I forgot to mention that to you. I am a loan officer. I do work with a national lender, so we're here to help you guys as much as possible. Whether if you're looking to refinance purchase, we can help you with those as well. If you guys like these videos, please smash that like button. It helps out our channel. We greatly appreciate you guys. And we'll look forward to see you guys in tomorrow's video. Remember, tomorrow will be important because it's the CPI report that will be coming out. And the last time we had some negative reports from the PCN CPI report, we had a pretty big negative reaction. So stay tuned. And I believe tomorrow they're expecting kind of a big spike, like 0.7% jump. Last time it came in at 0.9. Right now they're saying 0.7. So just be careful tomorrow. All right. Have a great rest of the day, and thanks so much for watching, and see you tomorrow. Bye-bye.